Kia ora, welcome to episode 95 of Talking Dairy. I'm your host, Jack McGowan, and today we're looking into how this season is shaping up and what's on the horizon for the next. It's been a season of shifting gears. We started with cautious optimism and high costs, but as the months rolled on, things started looking up. Better milk prices, easing interest rates, and a bit more breathing room financially. But what does that actually mean for your farm? And more importantly, what should you be doing to make the most of it? Joining me today to unpack it all are two experts who know this space inside and out, Mark Storey, Head of Economics at DairyNZ, and Paul Bird, Farm Systems and Business Specialist. They'll break down how the season has played out, the trends shaping next season, and the smart financial moves you can make now to keep your farm business resilient. Before we get started, a quick disclaimer. The content in this podcast includes general commentary on market trends. It should not be considered as investment advice. Certain transactions, such as those involving futures, options, and high-yield securities, carry significant risks and may not be appropriate for all investors. We advise seeking independent legal or financial guidance before making any investment decisions. All right, let's get into it. Tēnā korua, thank you for joining us today, Mark and Paul.
Hi, Jack. It's great to be here.
Hi, Jack. Thanks for having us.
Excellent. Let's start by finding out who we're talking to. Mark, you are a regular on Talking Dairy, but for those who haven't heard you already, tell us a bit about yourself and your role at DairyNZ.
As you introduced me, my title is Head of Economics here at DairyNZ. I generally describe that I've got two teams here. One is the dairy-based team who are responsible for our on-farm data collection, and the other team I'm responsible for is the economics team. In a way, my role is effectively getting good data into good evidence and into good insights for farmers and the sector. That's sort of the wrap on the products. Sometimes that's very direct service in terms of getting data from, for example, the GDT auctions and having some discussion about that. And other times it's much of a longer process about getting data and feeding it into research projects and then sort of coming back and talking to farmers about what that means for them.
Thank you, Mark. And to you, Paul, what's your background and your role at DairyNZ?
So my background, I originally started off in rural banking. I was also a consulting officer and have done advisory work overseas in Australia, the UK and Ireland. And my current role at DairyNZ is a business specialist. And so that's really looking, the business management side of dairy farming. I spend a lot of time with dairy-based reports, looking at data, looking at what some of the key profit drivers are of dairy farms and also involved in a lot of business management training. So generally things that have a sort of a business tag associated with it, you'll find me around the place.
Thank you, Paul. Now, Mark, looking back to the start of the 2024-25 season, you said you were cautiously optimistic about the season ahead, but financials look like they might be tight with high costs. Nearing the end of the season now, how has it shaped up compared to previous years?
It's been a good season. I think any time we, from DairyNZ or as an economist or comment on the season, it's always tricky which adjective you put onto it, because if you say good, obviously there's different perspectives on that across the country, and some parts of the country and some parts of the milk will have been doing very well out of this last season, and some, especially now, will be finding it quite tough with weather conditions. But overall, if we think back to where we were in June last year when we first published the Econ Tracker forecast for that season, we were predicting a challenging season ahead. We were predicting costs would stay quite high. They've sort of increased over the last few years and have stayed, even though they've come back a bit, have stayed at quite high levels. We were expecting some relief in terms of interest payments, but that not really to kick in until, a year ahead, but to start to see it. So we were kind of forecasting quite tight operating profit and cash surplus for farmers coming out of the season. We thought things going well with a payout price of at about $8, farmers would be close to or at break even. As the season's progressed, the story's got progressively better, at least from a revenue perspective. So, it's not so long ago that, fairly early in the season, Fonterra revised its payout forecast upwards. We quickly sort of moved from $8 up into the $9, into the $10 midpoint where it is now, and currently sort of staying there. So that's like a significant increase in revenue for farmers over the season. And while it's not a record. It's sometimes the current payout price has been discussed as a record in terms of in nominal terms, which it is. In real terms, when it's adjusted for inflation, it stands, you only have to go back to 21, 22, actually, when the milk price was in real terms higher. And going over the last 20 years, you can sort of see quite a few times when it's been sort of equally high. But it's been a good year in terms of revenue. And I think generally across the country, a pretty good year in terms of production. And you put the two things together, and I think you can put solid in front of the adjective. In fact, perhaps even better than solid. It's been, when you're getting a payout price of $10, that's a good place to be.
Were there any developments over the last year that have been unexpected?
The unexpected positive development was undeniably the revenue, the payout price. So I can remember, I think in a podcast about this time, I think I said anything with an 8 in front of it is great. I haven't kind of worked out the rhyming thing for something with a 10 in front of it, but I'm sure we can think of one. So that was the positive surprise. We've had weather challenges and other things during the year that Paul can speak to in terms of the production impacts through the course of the season. But the major unexpected thing was it's been a very good year in terms of the payout price.
And why was that change in payout a surprise or unpredictable at that time?
Well, the international outlook, the market conditions got into balance perhaps quicker than we're expecting to do. I think there was some sort of re-engagement from China in the market in a more positive sense than we're expecting throughout the season. So the GDT auction started to go upwards and stayed solid. So regardless of whether that situation was coming from China or Europe or the US, the fundamentals of the market were clearly in a pretty good position in terms of balance, pushing the price, the market auction prices upwards. So long story short, the market condition has been favourable for us in the past season, and there's been solid demand for our product internationally.
Now, Paul, with farmers seeing a relatively high payout price this season, not record, but very high, how can they make the most of that payout?
The key thing is probably to think about aiming to invest that money rather than spending it. And what I mean by that is putting money into debt reduction, investing the money in land or cows or essential farm improvements is just really important, because it's going to be quite tempting just to sort of spend the money and not really see some benefit to it. And so, there's a real opportunity here. And there's a bit of a saying that I sometimes use with some of the sort of younger managers and contract milkers that I would run some courses for, and it's money is round and it rolls away. And so the key thing with this payout is not to let the money roll away. And one way to sort of think about this is that, let's say you're, say a typical farm's producing 150,000 kilograms of milk solids. At the start of the season, we were thinking $8. Now it's looking like $10. So that's $2 extra income. And you multiply that by your milk solids, so that's 300,000 extra dollars. Take off some tax, just sort of round the numbers. And, there's $200,000 of extra income that's really sitting there. And so it's just making sure, how do you take that money and put it to good use? And there'll be people wanting to drive up your drive and try and get a little bit of that $200,000. And just be very discerning when you go to spend your money. Are you going to get a good return on it? And just think about investing rather than spending it.
Thanks, Paul. And as Mark was at pains to say, the payout doesn't stay high consistently. It's cyclical. So
just looking at the payout price over the last 20 years, because that's what economists do. It's not just the current one. It's like we like to go back and sort of see how it's developed. It's very up and down. And the other story, which I think a lot of farmers are aware is, we really get a record payout price 2 seasons in a row. So it's hard to know when the peak is, but a strong price, a peak has normally always been followed by, historically, quite a significant trough or fall off. So that's the lesson, and I think that Paul was alluding to as well. I mean, this is a good season, enjoy it, but use that money wisely, because we don't really know what's going to happen in the next season, and dairy farmers do know that the payout price is inherently cyclical.
I think, Jack, you sort of talked initially about what's been unexpected this season. I think that's probably the key message, is that, going into a season, it's actually very hard to sort of expect a payout or expect a certain sort of type of climate. And it's just that, coming back to sort of business management, it's really around, yes, you've got to sort of have sort of a medium-term projection of what you think you're going to get, but we really don't know at the start and how things are going to end up. So you just have to set your business up that you can cope with. You're ready for the high and you're ready for the low, and you'll get through, multiple seasons.
Okay, Paul, so what strategies might farmers use to make the best of that extra farm income that they get this season?
I think generally I mentioned about, just trying to sort of invest the money. I think when you do get a real boost in payout like we've got, there will be some things that you might decide to sort of bring forward. And so you might have been looking at some sort of development on the farm that is essential. So repairs and maintenance might have been planned for the next season. So, in some cases it will be actually appropriate to bring forward that expenditure, put it into this year, and perhaps reduce your tax bill. So there's those types of things. But again, be careful when you're doing things not to use the McDonald's analogy, just don't sort of upsize everything because your bank account's sort of looking really good. Just do what's required, do what you know is going to give you a good return, and just keep focusing on keeping hold of that cash. So those sort of things. I think spending money on supplements for the last little bit of the season, that's fine, but again, just be cautious about what you're paying and not milking on too long, which we might talk about a little bit later, but things like body condition score and pasture cover are essential to keep track of. So just be careful about the supplement expenses in that last month, going too over the top with that.
Looking on farm, how is the current season going in terms of feed, weather conditions and milk production, Paul?
Yeah, well, it's actually quite mixed. In a lot of regions, it's quite tough. If you look at most of the North Island, it's definitely drier than normal. And for some farmers listening to this will be thinking it's a little bit more than drier than normal. It's absolutely baking. So if you look at the NIWA soil moisture measurements, North Island on average is drier. South Island, it's quite mixed. There's some significantly dry areas, but for example, say Canterbury would be not looking too bad. So quite mixed. Overall milk production up to January, we don't actually have the latest information, but it's up about 7% for the same period last season. So as Mark was saying, milk volumes are actually not too bad across the country. Again, a little bit regionally specific. I think a key point to think about is that we know that across the country, 87% of the annual production occurs between June and March, and only 13% of the production in the final 3 months. And so most of the milk's been produced, and so it's important to think about that in relation to the $10 and just really think about those decisions in those last couple of months in terms of what you're spending money on.
And Mark, do you have any insights on how farmers are feeling towards the end of this season?
Just looking at some of the recent survey data we have, because DairyNZ does survey farmers, and others like Rabobank and Fed Farmers also survey farmers and their mood and how they see the season. Generally, farmers are in a reasonably positive mindset at the moment, although things like, as Paul's been talking about, the dry conditions in parts of the North Island in particular will be impacting a lot of farmers. Our most recent DairyNZ Farmer Perception Survey data showed that 85% of farmers felt positive about their performance of their farm business over the next 12 months, with an additional 12% feeling neutral. So that's pretty good. Similarly, 65% felt positive and 27% neutral on the outlook for the dairy sector over the next 10 years. Those are also good numbers. Lots of the positivity, I think, is stemming from the demand for dairy, the milk price this season, but also they're sort of seeing some of the policy developments going in a positive way for the farming sector, and the government sort of engaging in a new way with dairy. So that's behind what we're sort of seeing from a general high level of positivity in the sector. Paul might have a bit more anecdotally to add.
I don't really have a lot to add to that, Mark, but when I talk to farmers, the weather does sort of dominate their emotions quite a bit. They're wanting to feed the cows, and when things are starting to get a little bit brown and it sounds a little bit crunchy underfoot out in the paddock, that does create a little bit of stress for people. I do think overall there is positivity, and I think just building on what Mark said, New Zealand's coming out of a recession, and New Zealand farmers, what they do really for the country. It's just a huge part of our economy. And farmers I talk to, I think, are feeling more valued in the country. And when you look at the tax bills coming from dairying, it's just so important. And I think that valuable contribution is starting to be sort of felt amongst the farming community, which is great.
And with this season wrapping up rather positively, are there any indications on what the 2025-26 season might look like, Mark?
Yes, well, that is the question, isn't it? It's the crystal ball gazing time of the year. We start to look ahead to next season, and it's the time to be doing that because this season's nearing completion. It's always like whatever I say here, it tends to get 100% wrong. Or
yeah, we'll be back in 6 months talking about why you're surprised.
To interrogate me, so I try not to put my neck on the line too much. Overall, like, we're soon to release our forecast for the 25-26 season with the numbers. I've sort of seen the preliminary numbers and they look similar to where we're sort of ending up this year. So we're not expecting, at the moment, we're expecting the price, and the banks have been saying this as well. The initial forecast for next season in terms of payout are up around the $10 mark. That would obviously, our expectations around expenses, etc., that they would be similar, and also that the break-even milk price would sort of stay similar to where it has been this season. So the market fundamentals in terms of supply and demand look relatively positive. It's hard. I'm not an expert on China. I'll come back and talk about some sort of like the clouds on the horizon, but focusing on what we do know, interest rates are forecast to come down reasonably significantly this year, and those interest rate costs that have been announced will start to actually come into effective borrowing. So farmers will be getting relief on that front. That is almost not exactly guaranteed, but expected. So initial signs right here and now, as we're looking at another positive year for dairy farmers, 25-26, in terms of their operating profit and cash positions.
You mentioned the Econ Tracker. Is that where farmers can find forecasts?
That's where farmers will be able to find, at the time of this podcast going live, our new season forecast for 25-26. And yeah, so all the details there in terms of the breakdown of farm working expenses and interest costs and all the line items will be on that forecast. It's always point to say, at the beginning of the season, the forecast subject to a lot of margin for error.
Okay, so farmers can find the forecast at dairynz.co.nz/econ tracker. Mark, you mentioned clouds on the horizon. What's on the international stage that could threaten this positive outlook?
Cloud might be overstating it, but it's a volatile situation out there, and I think there's concerns about where the markets might go, and it's largely concerns that are sort of like outside the questions of supply and demand for dairy. The key issues of concern are what might happen in terms of tariff wars, trade disputes, what will happen if the US government goes through with initiating a tariff dispute with China, potentially pulling in others like Mexico and Canada, and what will happen to the demand for dairy product on the back of that. You can speculate both ways, but it brings a lot of uncertainty into the picture. And then I think the other issue behind that is potentially the diplomatic issues that are ongoing at the moment, the chances around conflict and what that might mean for energy prices going into the season. So I think we're starting to see some of that uncertainty reflected in the futures price for milk now. It's coming back a bit. That uncertainty means where the price this season's going is there a significant downside risk around it as well. And that's why, you would encourage, and coming back to what Paul's talking about, manage that cash position well this year going into next season. Don't expect the payout price, don't operate on that as your assumption to be above $10 necessarily. Have different scenarios. And, if you've got the option to be looking at hedging your risks, then, obviously we generally encourage farmers to do that as well.
Paul, the new dairy season will be upon us quicker than we would like to admit. What key financial decisions and considerations should farmers be making now to prepare for next season?
One of the most important ones, and it might not sound like a financial decision, but comes back to your cows and your pasture cover going into the next season. You've just got to protect that. And so your cows have got to be 5 condition score going into the winter, trying to build up a pasture cover ready for calving. And so those two things, they've been in KPIs for decades, and it's just very important that they stay right at the top of the list and don't endanger those by milking on too long and damaging production and reproduction for next season.
Yeah, I always remember our vet when we first started dairying talking about managing body condition score as making a capital investment in our herd.
Oh, that's right. And the ramifications just go on for multiple seasons. If you get that wrong, there's so many negative consequences. So, yeah, absolutely essential. And then I think from a budgeting point of view, the one thing working with a lot of farmers over quite a number of years, one attribute I see that really stands out is the highly profitable farmers. They're pretty much always very, very good at cash flow budgeting, monitoring cash flows monthly. And so there's a couple of things that are worth thinking about. There's probably going to be higher tax payments required to be paid because of this extra income. And there's could be provisional tax payments in May. So make sure you've talked to your accountant and you're prepared for that in terms of your budgeting process. And then the other one is, particularly for Fonterra suppliers, is that there could be less income in June and July because of the way the advance payments are being structured this year. So you might be thinking you normally get top-ups in June and July. You may not be getting these. And so those two things combined just really point to the fact of get your monthly cash flow right, talk to your accountant, have everything planned out monthly right through till the spring, and you'll be fine. But if you're not prepared for those, you could get a little bit of a surprise. And we've got a number of budgeting tools to help with people. And, if budgeting's not your thing, maybe this autumn and going into the winter, it's time to think about getting some budgeting training. And Dairy Training Limited offer some excellent budgeting courses. So I just really encourage people, you've got to be good at budgeting and cash flow management to run a profitable dairy farm.
Thank you, Paul. And that's a wrap for today's episode. As we head into the new season, the key message is clear. Use this time wisely. The decisions you make now will shape your farm business's future resilience. In April and May, DairyNZ will be hosting events around the country where you can hear more about next season's forecast compared to historic trends. More information on the events will be available at dairynz.co.nz/events. And remember, you can also access budgeting tools from DairyNZ online to help guide your planning for the next season ahead, as Paul said. We'll link those resources in the show notes, including the Econ Tracker. Thanks for joining us today, and ngā mihi nui to Mark Storey and Paul Bird for their time. Thanks for tuning into this episode of Talking Dairy. Make sure to hit follow so you can keep up to date with our latest episodes. You can also keep up with DairyNZ News on Facebook, Instagram and LinkedIn, or go to our website and sign up for our fortnightly DairyNZ News emails. As always, if you have any feedback on this podcast or have some ideas for future topics or guests to have on the show, please email us at talkingdairy@dairynz.co.nz. Mā te wā, mō te ora, catch you next time.